Hello friends, in this video we are going to discover the top 10 most tax-friendly states for retirees. As you approach retirement, or if you're already there, you may be thinking about moving to a different state to live out your golden years. If that's the case, consider moving to one of the most tax-friendly states for retirees. It can make a huge difference when you're trying to stretch out your retirement savings. Of course, there are other things to think about if you're exploring relocation. For instance, you'll want to take climate, proximity to family and friends, access to quality healthcare, and a host of other important factors into account before picking a new location. But make sure you add taxes on retirees in any state you're considering to the list of primary factors. Depending on your situation, the total state and local tax burden in one of the best states to retire for taxes can be thousands of dollars less per year than in another. If you're looking for the 10 best states to retire in for taxes, check out our video till the end. Our results are based on the estimated state and local tax burden in each state for two hypothetical retired couples with a mixture of income from wages, Social Security, traditional IRAs, Roth IRAs, private pensions, 401k plans, interest, dividends, and capital gains. One couple had $50,000 in total income and a $250,000 home, while the other had $100,000 in income and a $350,000 home. All of the states on our most tax-friendly states for retirees list exempt Social Security benefits paid to seniors from state income taxes. Most also allow an exemption for at least a portion of our hypothetical couple's other retirement income, such as private pensions or IRA withdrawals. They tend to have low property tax rates and/or reasonable sales tax rates, too. Take a look and see for yourself why each state is considered one of the best states to retire in for taxes. Kindly make sure to hit the subscribe button and press the bell icon before we start this video about the 10 most tax-friendly states for retirees. Now let's dig deeper into each of the top 10 most tax-friendly states for retirees. Number 10. Tennessee. State income tax range, none. Average combined state and local sales tax rate, 9.547%. Median property tax rate, $560 per $100,000 of assessed home value. Estate tax or inheritance tax, none. Residents of the volunteer state pay no taxes on Social Security benefits, pensions, or distributions from their retirement plans. That's because Tennessee is one of a handful of states without an income tax. Tennessee is also one of the states with no estate or inheritance taxes. That will put your heirs at ease. Property taxes in Tennessee aren't too bad, either. For instance, our hypothetical couple with a $250,000 home in the state would pay about $1,400 per year in property taxes, $1,960 for the couple with a $350,000 home. That's well below the national average. There are also property tax relief programs in the state offering property tax reimbursements to income-eligible senior citizens. Tennessee also has a property tax freeze program for homeowners age 65 and older. Watch out for Tennessee's sales tax, though. The state's 9.547% average combined state and local sales tax rate is the second highest in the country. Tennessee is also one of the few states where groceries are subject to sales tax. They're taxed at a 4% rate by the state. Additional local taxes may also apply. Number 9. Idaho. State income tax range, 1%, on taxable income up to $1,662 for single filers, up to $3,324 for joint filers, to 6%, on taxable income over $8,311 for single filers, over $16,622 for joint filers. Average combined state and local sales tax rate, 6.02%. Median property tax rate, $492 per $100,000 of assessed home value. Estate tax or inheritance tax, none. At first blush, the gem state might not look like a tax-friendly state for retirees. Idaho taxes all income, except Social Security and railroad retirement benefits, and its top income tax rate of 6% for 2022 kicks in at a relatively low level. While there is a generous retirement benefits deduction, it's only available to retirees with qualifying government retirement plan income. Note, beginning in 2023, a flat rate of 5.8% on taxable income over $2,500, $5,000 for joint filers, will apply. The threshold will be adjusted annually for inflation after 2023. But, if you dig a little deeper, retirees will see some good news on taxes. For example, sales taxes aren't too bad. The statewide sales tax is 6%, but local jurisdictions only add an average of 0.02% on top of the state rate. When you add it all up, Idaho has the 15th lowest average combined state and local tax rate in the country at 6.02%. And, while groceries are taxable, the state offers a tax credit of $100 per person to offset taxes on food, and it's increased to $120 if you're 65 or over, $140 starting in 2023. Idaho homeowners should also be happy when compare their property tax bill with friends and family in most other states. The state's median property tax rate is the 5th lowest in the country at only $492 per $100,000 of home value. $250,000 home equals $1,230 in tax, $350,000 home equals $1,722 in tax. Plus, homeowners age 65 or older with income under certain amounts may qualify for a property tax reduction and/or deferral. There are no estate or inheritance taxes in Idaho either. Number 8. Arizona. State income tax range: 2.55% on taxable income up to $28,653 for single filers, up to $57,305 for joint filers, to 2.98% on taxable income over $28,653 for single filers, over $57,305 for joint filers. Average combined state and local sales tax rate, 8.37%. Median property tax rate, $508 per $100,000 of assessed home value. Estate tax or inheritance tax, none. The Grand Canyon state exempts Social Security benefits from state income taxes, plus up to $2,500 of income from federal and Arizona. Government retirement plans. Military retirement income is tax-free in Arizona, too. Income tax rates are also relatively low for most retirees. A two-bracket tax rate structure is in place for 2022, 2.55% and 2.98%, but the state will adopt a flat 2.5% rate beginning in 2023. The estimated property tax on our first hypothetical retired couple's $250,000 home in Arizona is only $1,270 per year. For our second couple's $350,000 residence, the estimated annual tax is only $1,778. Both those amounts are significantly below the national average. In addition, homeowners age 65 and older can freeze the value of their property for real estate tax purposes for 3 years if they lived in the home for at least 2 years and their annual income is below $43,872, one owner, or $54,840, multiple owners. The dollar figures shown are for the 2023 program. Other property tax breaks are available for seniors, too. Sales taxes in Arizona are above average, though. The average combined, state and local, rate is 8.37%, which is the 11th highest in the nation. However, Arizona doesn't have an estate or inheritance tax, which makes it a more attractive retirement destination for wealthier seniors. Number 7. District of Columbia. State income tax range, 4% on taxable income up to $10,000 to 10.75% on taxable income over $1 million. Average combined state and local sales tax rate, 6%. Median property tax rate, $552 per $100,000 of assessed home value. Estate tax or inheritance tax, estate tax. Although the general cost of living in Washington, D.C., is high, the average tax burden for retirees isn't. When it comes to income taxes, there are 2 keys to a lower tax bill. First, how much of your income is from Social Security benefits is an important factor. That's because the city doesn't tax Social Security payments, but it does tax most other common forms of retirement income, such as pensions, 401k funds, and IRA withdrawals. Second, qualifying for the city's income tax credit for property taxes paid can make a huge difference in the amount of tax you owe. The refundable credit is worth up to $1,250 for the 2022 tax year. As a refundable credit, if it's worth more than the tax you owe, the city will send you a refund check for the difference. Plus, certain seniors have a higher income threshold for claiming the credit. For 2022, residents age 70 and older are eligible for the credit if their federal adjusted gross income is $78,600 or less, while the threshold is $57,600 or less for younger residents. Income taxes can be high on wealthier retirees, though. For example, the top rate is a whopping 10.75% on taxable income over $1 million. Shoppers don't get hit too hard with sales taxes in the District of Columbia. The city imposes a 6% tax on purchases, but that's it. There are no extra local taxes to worry about. As a result, the overall sales tax rate in D.C. is well below the national average when both state and local taxes are considered. Property taxes are relatively low in D.C., too. The district's median property tax rate is tied for the 12th lowest when compared with comparable data from all 50 states. For our hypothetical retired couples, their estimated annual property tax bills in D.C. would be $1,380, $250,000 home, and $1,932, $350,000 home. Plus, homeowners 65 and older may qualify for a 50% property tax reduction, deferral of property tax payments, and a cap on property tax increases. Here's one important downside for wealthier retirees. For 2023, Washington, D.C., estates worth $4,528,800 or more are subject to a city estate tax. Number 6. South Carolina. State income tax range, 3% on taxable income from $3,200 to $16,039, to 6.5% on taxable income over $16,039. Average combined state and local sales tax rate, 7.44%. Median property tax rate, $518 per $100,000 of assessed home value. Estate tax or inheritance tax, none. The Palmetto State extends some real Southern hospitality to retirees by offering a charming collection of income tax breaks. To start, Social Security benefits are completely exempt. In addition, taxpayers age 65 or older can exclude up to $10,000 of retirement income, up to $3,000 for taxpayers under 65. Seniors can also deduct $15,000 of other taxable income, $30,000 for joint filers. Beginning with the 2022 tax year, veterans can exclude 100% of their military pension, only a partial exemption was previously allowed. Plus, the top income tax rate is going down. It dropped from 7% to 6.5% in 2022. Then, each year thereafter until it equals 6%, the top rate will decrease by 0.1% if general fund revenues are projected to increase by at least 5%. Low property tax rates in South Carolina help retirees, too. The statewide average property tax on a $250,000 home in the state is only $1,295. It's only $1,813 for a $350,000 residence. Those amounts are the seventh lowest in the country for houses at those price points. Seniors can also claim a homestead exemption for the first $50,000 of their property's fair market value. To qualify, you must be at least 65 years old and a legal resident of South Carolina for 1 year. The lack of an estate or inheritance tax also makes South Carolina a desirable location for wealthy seniors. There is some bad news, though. Sales taxes are on the high end in South Carolina. There's a 6% statewide levy, and local governments can add as much as 3%. The average combined rate is 7.44%, which is well above average. Number 5. Nevada. State income tax range, none. Average combined state and local sales tax rate, 8.23%. Median property tax rate, $484 per $100,000 of assessed home value. Estate tax or inheritance tax, none. Nevada is a good place to spend your golden years if you don't want to gamble with your retirement savings. That's because the Silver State offers retirees a jackpot of tax savings. There's no state income tax, so you can cash in your retirement plans and collect your Social Security checks without worrying about a big state tax bill. There are no estate or inheritance taxes in Nevada, either. Nevada also has the third lowest median property tax rate in the US. So, if our first make-believe couple retired to Nevada and bought a $250,000 home, they should expect to pay around $1,210 per year in property taxes on the residence. For our second imaginary couple, they would only pay about $1,694 annually on their $350,000 home. Unfortunately, however, Nevada doesn't offer any special property tax breaks for seniors. Sales tax is one area where Nevada could do better. The state imposes a 6.85% tax, and counties may tack on up to 1.53% more. As a result, the average combined state and local sales tax rate is 8.23%. That's the 13th highest combined rate in the country. Number 4. Wyoming. State income tax range, none. Average combined state and local sales tax rate, 5.36%. Median property tax rate, $545 per $100,000 of assessed home value. Estate tax or inheritance tax, none. The Equality State is number 1 in our rankings for the most tax-friendly state for middle-class families. So it should come as no surprise that Wyoming is a tax-friendly place for retirees, too. The favorable tax climate for seniors starts with zero income, estate, or inheritance taxes. Sales taxes are low in Wyoming, too. The average combined state and local sales tax rate is only 5.36%, which is the 8th lowest combined sales tax rate in the country. You won't pay high property taxes to own a home on the range, either. For a $250,000 home in Wyoming, the statewide average annual property tax bill comes to just $1,363. It's only $1,908 for a $350,000 home. Those amounts are the 10th lowest tax totals in the nation for each price point. Plus, it's also good to know that eligible seniors in Wyoming can delay payment of up to 50% of their property taxes if money gets tight in retirement. Number 3. Colorado taxes. State income tax range, 4.4%, flat rate. Average combined state and local sales tax rate, 7.77%. Median property tax rate, $485 per $100,000 of assessed home value. Estate tax or inheritance tax, none. Many retirees in Colorado feel a Rocky Mountain high when they see their low property tax bill. The state's median property tax rate is the 4th lowest in the nation. For our hypothetical retired couple with a $250,000 house, that comes to an estimated $1,213 annual property tax bill. It's only $1,698 per year for our other couple's $350,000 residence. Property tax exemptions, rebates, and deferrals are also available for qualified seniors. In addition, for the 2022 tax year, there's an income tax credit of up to $1,000 available for certain seniors who don't claim a property tax exemption. Residents age 60 and older can also take advantage of a unique property tax work-off program, which lets them work for the city or county government to pay off a portion of their property taxes. Income taxes are reasonable in the Centennial State, too. For the 2022 tax year, the state applies a fairly reasonable 4.4% flat income tax rate to taxable income. It was lowered from 4.55% to 4.4% by Proposition 121, which was approved by voters on November 8, 2022. The state also limits how much its revenue can grow from year to year by lowering the tax rate if revenue growth is too high. For instance, the rate for 2021 was lowered from 4.55% to 4.5% because of a high fiscal year revenue growth rate. If you're at least 65 years old, you can deduct all Social Security benefits that were subject to federal taxes when you file your Colorado income tax return. Younger retirees might have to pay Colorado taxes on a portion of their Social Security payments. Wealthier retirees will also appreciate the fact that Colorado doesn't impose an estate or inheritance tax. So, more of your money can be passed on to your family when you die. Sales taxes will bring retirees back down to earth, though. Although the state sales tax rate is low, only 2.9%, local governments can tack on as much as 8.3%. As a result, the combined state and local sales tax rate is above the national average. Number 2. Hawaii. State income tax range, 1.4%, on taxable income up to $2,400 for single filers, up to $4,800 for joint filers, to 11%, on taxable income over $200,000 for single filers, over $400,000 for joint filers. Average combined state and local sales tax rate, 4.44%. Median property tax rate, $273 per $100,000 of assessed home value. Estate tax or inheritance tax, estate tax. If your dream is to retire to a tropical island paradise, don't let taxes get in the way. Hawaii has one of the lowest average state and local tax burdens in the U.S. for retirees. Higher income seniors may get caught in the Aloha State's lofty income tax rates. The top rate is a whopping 11%, but most people won't pay nearly that much. Hawaii actually has 11 income tax rates below 11%. Social Security benefits are completely tax-free. Employer contributions to other forms of retirement income are also exempt, example, traditional pensions and employer contributions to 401k plans. Although housing prices are high in Hawaii, property tax rates are really low. In fact, the statewide median property tax rate is the lowest in the whole country, and by a pretty good margin. If our hypothetical retire couples moved to Hawaii, their estimated annual property tax bills would be only $683, $250,000 home, and $956, $350,000 home. Depending on where in Hawaii they live, seniors could also qualify for some additional property tax relief. Sales tax rates are low, too. The state imposes a 4% tax, but localities can add as much as 0.5%. The average combined state and local rate is only 4.44%, which is the 7th lowest rate in the nation. Most things are taxable in Hawaii, including groceries and clothing, so residents typically end up paying more than the low rate suggests. Hawaii also imposes an estate tax on estates worth $5.49 million or more. Tax rates range from 10% to 20%. Number 1. Delaware. State income tax range, 2.2%, on taxable income from $2,001 to $5,000, to 6.6%, on taxable income over $60,000. Average combined state and local sales tax rate, 0%. Median property tax rate, $533 per $100,000 of assessed home value. Estate tax or inheritance tax, none. Congratulations, Delaware, you're the most tax-friendly state for retirees. With no sales tax, low property taxes, and no death taxes, it's easy to see why Delaware is a tax haven for retirees. For beginners, you'll have more disposable income in your golden years if you live in the first state, because you'll pay zero state or local sales tax on your in-state purchases. Delaware is one of only a handful of states with no sales tax. You'll also have more money to spend on the grandkids because property taxes are so low. The estimated annual property tax bill in Delaware for our first make-believe retired couple is just $1,333 on their $250,000 home. It's just $1,866 for our second imaginary couple's $350,000 home in the state. Those property tax totals are the 9th lowest amounts in the nation for homes at those prices. So, our make-believe retired couples will be quite happy in the state. Plus, some Delaware seniors qualify for a school property tax credit of up to $400. You might have to live in the state for 10 years to get it, though. Since there are no estate or inheritance taxes in Delaware, you can pass along more of your wealth to the grandkids, too, or to other family, friends, or charities. The only downside, and it really isn't that bad, are middle-of-the-road income taxes. The rates are comparatively reasonable, and residents age 60 and older can exclude up to $12,500 of pension and other retirement income, including dividends and interest, capital gains, IRA and 401k distributions, etc. Social Security benefits are also exempt. But, in the end, income taxes don't add enough to a retiree's overall tax burden to keep the state out of the top spot on our list. So, which is your favorite states among the top 10 most tax-friendly states for retirees? Well, that's all we have for you today. Thanks for watching. If you enjoyed the content of this video, click the subscribe button so you can receive more content like this. Post your favorite places among the top 10 most tax-friendly states for retirees in the comments below. I'd love to read them, and I'm sure others would too.